Hey guys, Boris Last from BK Forex. Welcome to our weekly Forex technicals for 520 through 25. Can the dollar rally last? Trading foreign exchange on margin carries a high level risk may not be suitable for all investors. So I ask you to read this disclaimer very carefully and understand all the risks associated with trading foreign exchange on margin and seek advice from an independent financial advisor if you have any doubts. Well, the dollar rally certainly had a very, very powerful move this week. And if you look at the euro just crunched and collapsed all the way through a lot of different levels. I'm actually looking at the weekly charts here because I think it's really important to take a look at where we are now. Yes, the dollar rally definitely had a very powerful move, but we're coming into very, very key support at 27.50. Now, it may very well be that the dollar rally is so strong that we're going to slice through the support like we slice through everything else. But given the fact that it's support from here and support from here, it's going to be, I think, much more of a challenge for the dollar to continue its just basically unimpeded move forward, given that we're coming into these very key levels. There's two things on the calendar next week that I think are worth considering. One is obviously the Bernanke speech that everybody's looking for, because if he sort of comes in and confirms that QE may be on its way out, that may be the kind of a push that could slice us all the way to fresh lows on the euro dollar for the year. If on the other hand he's much more cautious, then that could provide the kind of support that the charts are showing. And the second thing I think is going to be the European PMI data, which comes out on Thursday. That's the latest economic data out of the region. If we see any kind of positive inflection point out of that data, that may be helpful to the euro as well. So there are two events on the calendar that could support basically prices at around 27.50. Which is where we're going to be coming into very long-term support. But certainly on a longer-term basis, this is one very ugly chart if you're long, and one very powerful momentum if you're short. A break through the 2750s really opens up a run all the way out to the 2500s, and that would just be an unbelievable slaughterhouse of moves here in the euro. If you go on a more shorter term chart, you can see just how much damage has been done over the last few. Let's see if we can come up with our. Oh, here we go. We're having a little bit issue with my feed today. So yeah, I mean, we tested 28s, came back up, but it's a very, very weak bounce in the Friday session. It's basically the pattern that we've seen here is test, a little bit of retrace, more leg down, test, a little bit of retrace, a little more down, test, a little bit of retrace, little leg down, possible in the euro dollar as we continue. The yen is the reverse. It's the dollar rally to the other side. And you can see that the yen, of course, is. And my apologies, we're just having very, very big problems on the feed here. It's going to come in just 1 second. So the yen basically has all systems go. We cleared the 103 off of the better than expected University of Michigan number, and clearly the yen now is a sort of push up consolidation, push up pause. But I do think that 103.50, certainly 103.75, is going to provide it more of a pause than it has prior. We just, if you look at the simple RSI, there's clear divergence here. You basically have higher prices, lower RSIs. Now this is a natural function of a slow moving uptrend, but having now shown a third point of divergence here, sort of a weaker RSI as we push up, you got to believe that the momentum is kind of exhausting itself a little bit. It's very, very tough to call a top. It's usually a completely useless exercise in futility. But I do think that the 103.50, 103.75 could be a level of possible exhaustion. Another way to look at it is 102.05 now becomes support. That break over there, of course, takes us back through the 102.05 takes us back towards the 101.50s. The other thing to really just sort of think about the yen is there's no doubt that yen is a very, very strong rally, but it's a rally that kind of moves in a stair-step fashion and then comes down in an elevator fashion. So my point is that if you're long, you want to be cautious and protect your moves here, because there could be a day where we could have a very, very serious slide to the downside as the rally kind of corrects itself very, very violently. Cable, on the other hand, and give me another second to pull up the chart. Yeah, my apologies. It's just Friday afternoon. Charts are really, really slow today. So cable, on the other hand, had a very, very nasty, ugly turn today. We basically took out the 53s yesterday, complete reversal on a break of the day's lows today. It looks pretty ugly on the charts, I think, on a longer term basis. Let me just show this to you. The fact that we came into 150, 150s, and you'll see this in just 1 second, really doesn't bode well for cable as far as the look at this very ugly move. Basically took out the lows of the last 2 days, and it kind of shows that 151 could be in sight here. Now this is definitely near-term support here. This 151. 50 support here, and there's more of support here in this kind of like chunky little zone. But it feels like it really wants to test this 51s, which could be a more deeper support for cable, at least in the near term. To the top side, we've just basically made a very, very big rounded U-turn here on the dailies, and now 53 becomes a natural resistance, and then after that, basically 55 is natural resistance. A break of the 51s to the downside really opens up a revisit of this spike bottom in the underneath the 49s. So it could be a possibility that we could be headed for a double bottom retest here with 50 and 51 to the downside in cable, as cable just does not look healthy at all. Today's reversal technically was kind of very, very ugly. And lastly, the one-way trip to the downside has certainly been Aussie. Aussie has just been a disaster. If you're trying to buy Aussie on calling the bottom on the Aussie, rather, you want to talk about excess in futility, it's been just an unbelievable excess in futility. But I'm going to make another attempt at calling a bottom on the Aussie here, just because I want to show you something interesting. Give me just 1 second, let the charts come up. There's no doubt that the thing sliced through 99s, 98s, like a hot knife through butter, and it's just been in pure liquidation mode. But as you can see here, first of all, we have just massive amount of days. You have, I mean, yes, Aussie is notorious for just putting together quite a lot of days of continuous downside action, as you can see right over here. It's a very, very similar pattern over here. Once it catches a trend, it really does catch a trend. But it's coming into a zone here. If you look at this on, just give this to you a little bit more on a basis here. No, sorry, this is not it. It would have to be over here. It's coming into this 98, and basically this is the spike. The spike lows here were 95.80. So basically the 97, 96 zone is clear longer-term support here, and I think it's going to attract a lot of bargain hunting. I think anywhere above just above 95 is going to attract some bargain hunting, because the thesis on Aussie is that the RBA is going to continue cutting rates, and I think that's very much an open question given the fact that the Australian economy is by no means just turning over. It's actually showing a lot more robustness than you would think. Also, look at the RSI on a daily. It's 19. That's an extraordinarily low value. Now, of course, it can get lower, but when you get below 20s on the daily RSIs, you are really looking at extraordinarily oversold conditions. This does not mean that I think there's going to be a massive rally in the Aussie, but I do think that getting fresh shorts here is more dangerous than trying to bottom fish a little bit. Now, you may get stopped out once or twice, and I certainly would keep my stops tight, but I do think a turn may be in the offing here relatively soon, simply because of those longer-term supports that you see in the Aussie. So the short answer is, can a dollar rally continue? I think the answer is yes, but not for much longer. So we'll be watching this very carefully, see how everything develops, and next week, of course, I think would be a very seminal week for a possible base in this dollar rally move. Wishing you guys the best of luck and the best of trading. This is Boris Schlossberg for BK Forex. As always, trading Forex carries a high level risk and may not be suitable for all investors, so I ask you to read the disclaimer and follow us on bkforex.com. Over and out.